Okay, ready to dive in. Today we're looking at Syngene International Limited, their Q2 2024 report. They're big on research and manufacturing based in Bangalore and listed, of course, both on the Bombay Stock Exchange and the National Stock Exchange of India. But their numbers, there's something more there than just, the usual ups and downs.
Yeah, it's intriguing. On the surface, revenue growth is fantastic,
Yep.
up year over year, even up compared to last quarter. Usually that's a good sign, right? Company's doing well.
There's
But
always a but, isn't there?
right,
What's the catch this time?
their profit, it actually dipped this quarter, down from last quarter, even with revenue higher. Not usually what you want to see together.
So they're making more money, but keeping less of it. That's where I need the expert help. Why would a company like Syngene see profits shrink when revenue's climbing?
That's the question. And that's where these accounting changes get interesting. It's not just the numbers themselves, but what they're telling us about Syngene's strategy.
Okay, so break it down for me. What changed and why does it matter?
Big one is how they're handling inventory. They've made a specific policy change for manufacturing inventory, separate from their research inventory.
Hmm.
Now, this might seem minor, but it's actually a strong signal. This type of policy is really designed for companies that are very much into, well, manufacturing.
Which is interesting because they just acquired that big biologics facility from Stellis Biopharma. That was a RS $5,632 million deal, if I remember right. And they're already talking about doubling its capacity.
Exactly. So they're betting big on manufacturing, changing their accounting to reflect that.
What was the second accounting change that caught your eye?
They've also revised the estimated useful life of some of their manufacturing assets, basically changing how they depreciate those assets over time.
Depreciation always makes my eyes glaze over a little. Why is this specific change important?
Think of it like you buy a delivery truck for your business. You expect it to last a certain number of years, right? Delivering value that whole time. This is them doing that, but with their manufacturing equipment. By extending the useful life, they're saying, hey, we think this stuff is going to be cranking out product, generating revenue for longer than we initially planned. It's a subtle vote of confidence in their long-term approach.
So, big investments, accounting adjusted to match, signaling they're serious about manufacturing for the long haul. Starting to see the picture here.
Definitely. But there's another layer to this, leadership changes. And those, alongside everything else, tell us even more about where they might be headed.
Leadership changes. Always interesting, always a potential sign of something bigger going on. Who are the key players and what do we know about them?
Well, their CFO, Sibaji Biswas, is stepping down. Deepak Jain's taking over in December.
New CFO at a pivotal time. What's Mr. Jane's background? What kind of signal does his appointment send?
Jain, his resume, it's got growth written all over it. 25 plus years driving expansion at big companies, Aether Energy, First Advantage, Apple, P&G, even a stint at EY India. And it's not just finance, he's got process engineering, distribution, sales finance, you name it, he's probably done it.
That's a seriously diverse background. This is someone who knows how to navigate complex situations and clearly how to grow a company.
And when you tie that to the manufacturing expansion we're seeing, you got to wonder if they brought him in specifically for that. Aether Energy, they were known for growing fast, aggressively expanding, could be a sign of things to come for Syngene.
It's like they're putting together the perfect team for some serious expansion. They got the facilities, the money, and now a CFO who seems like he was born for this. But hold on, there's more. They've also got a new chief scientific officer, Dr. Jayashree Iyer.
Right, the CSO, the one who makes the scientific breakthroughs happen.
So who is she, and what does her appointment tell us about the future of R&D at Syngene?
Well, Dr. Iyer is an internal promotion. She's been with Syngene since 2016, leading their discovery biology team. She's been really deeply involved in building up their capabilities in small molecule and large molecule discovery. We're talking cutting-edge stuff here. Targeted degradation, bispecific antibodies, ADCs, even cell and gene therapy services.
So not an outsider, but someone who's moving up in the ranks. What does her background tell us about her approach to leading scientific teams?
She has a PhD in immunology and did her postdoc research at Caltech and UC Irvine. Those are some serious academic credentials. But here's the thing, she's also got tons of experience in the industry, over 25 years as a molecular pharmacologist. She's led drug discovery projects at some huge names, AstraZeneca, Merck, Ambrx, Theravance in the US, and Jubilant Biosys right here in India. I mean, we're talking over 30 peer-reviewed publications, book chapters, even 2 issued patents.
Wow, she's worked with the best of the best. That's an incredible network she's built and a ton of experience to draw on.
Exactly. And what I find especially interesting is her focus on scientific strategy, R&D innovation, and collaborations. Her appointment could mean that Syngene is getting ready to become a major player in collaborative drug development, maybe forming new partnerships, and really aiming for those big groundbreaking discoveries.
Okay, I see where you're going with this. We've got a company investing heavily in manufacturing, making smart accounting moves, Andy bringing on a leadership team with a history of success and innovation. It's like they're setting themselves up for a huge leap forward.
They are. But let's not forget that initial question, the dip in profit, even though the revenue's up. This is where those strategic investments become really important. It might be a calculated move. Yeah, sacrificing short-term gains for what they believe will be a much bigger payoff later on.
So they're thinking long term, building a foundation for sustainable growth. But what does this mean for their financial health right now?
Well, their cash flow really jumped out at me. Even with the big investments and that acquisition, they've managed to keep their cash flow from operations in the positive.
Now, that's a great sign. Just for anyone who doesn't speak finance, cash flow from operations tells you how much cash a company is making from its core business. It's a really important indicator because it shows they're not relying on debt or outside funding to fuel their growth.
Exactly. And looking at their cash flow statement, their operating activities brought in Rs 1,786 million in cash this quarter. That's a healthy amount of money, and it shows their core research and manufacturing services are doing really well. It's like having a really solid engine in your car, even if you're still working on the rest of it.
It also gives them more room to take advantage of new opportunities or handle any unexpected problems.
Right, and their cash on hand has actually gone up quite a bit since last year. That's always good news for investors. It gives them the financial flexibility to make strategic decisions, put money into future growth, maybe even reward shareholders down the road.
So they're playing it smart. They're not just throwing money around. They're making sure that their core business is strong and profitable. Anything else interesting pop up when you were going through their financials?
You know what I found interesting? The increase in their other income. It could be that they're successfully diversifying where their revenue comes from, maybe through strategic partnerships, licensing agreements, or even brand new services they're offering.
Smart move. Putting all your eggs in one basket is never a good idea. It sounds like they're building multiple streams of income, which makes them more adaptable to changes in the market.
Absolutely. And here's another interesting thing I noticed. Their research and development expenses have gone up. That lines up perfectly with Dr. IR's expertise and that focus on innovation we talked about. It seems like they're backing up their words with action, investing in developing new technologies, and potentially making groundbreaking discoveries.
They're firing on all cylinders, that's for sure. Investing, expanding, innovating, it's like they've got a roadmap to the top. But there's one thing we haven't really talked about yet. We discussed the new CFO, Deepak Jain, and the new CSO, Dr. Jayashri Iyer, but we didn't really get into the departure of Syngene's previous CFO, Sibaji Biswas.
Right, Mr. Biswas. It did seem kind of sudden, the way he left. Any insights into why he resigned?
The company announcement was pretty vague, just said he's pursuing other opportunities.
Yeah, that doesn't tell us much, does it? Is there anything about his history with Syngene, or his background, that might give us a clue?
It's hard to say without more info from the company. CFO transitions happen, of course, especially when a company's going through a lot of changes. And Syngene definitely is. That manufacturing expansion, the acquisition, the new leadership appointments, it's a lot to handle.
It makes you wonder if maybe Mr. Biswas had a different vision for the future. Maybe he wasn't on board with these new moves.
Possibly. Or maybe he just felt like it was time for something new, a different challenge. Whatever the reason, what matters now is that Syngene has a new CFO, one with a very particular set of skills, ready to lead them into the future.
It does feel like a passing of the torch, doesn't it? And with Deepak Jain's experience at those high-growth companies, it'll be really interesting to see what direction he takes them in.
And let's not forget about Dr. Iyer leading the way on the scientific side. With their combined expertise, it seems like Syngene is in a fantastic position to make some really exciting progress.
Absolutely.
So as we wrap up our deep dive into Syngene, it's clear they're a company to keep an eye on. They're making big moves in the life sciences industry, and this latest financial report, even with its little mysteries, shows a company that's on the cusp of a major transformation.
I agree. It's going to be fascinating to see what they do next.
For our listeners who've been with us on this journey, what are the big takeaways from our look into Syngene's latest moves?
Well, I think the biggest one is that Syngene is laser-focused on becoming a manufacturing powerhouse. The acquisition, those big expansion plans, even those subtle accounting changes, it all points to a strategic and well-funded commitment to growth in manufacturing.
It's like they're building a manufacturing empire, one step at a time.
Exactly. Second takeaway. Their financial health is really strong. They've got great cash flow, a healthy cash position, and they're actively trying to diversify their income streams. They're not just thinking short term, they're building a really solid foundation for the future.
A very smart and strategic approach to growth.
Definitely. Third, the leadership changes. While a bit of a head scratcher at first, ultimately shows Syngene's dedication to financial discipline, A&D scientific innovation. That new CFO, Deepak Jain, brings a ton of experience in driving expansion, and Dr. Jayashri Iyer, the new CSO, she's got this amazing track record in research and development.
It's like they handpicked them for this specific moment in the company's journey.
Exactly.
And finally, when you put all these factors together, you get a picture of a company with a clear vision, big ambitions, and the strategic thinking to make it all a reality. Syngene isn't just keeping up with the industry, they're trying to lead the way.
Couldn't have said it better myself. It really is a fascinating example of strategic growth and bold decision-making. It makes you think, what ambitious goals are they going to focus on next? What amazing discoveries are waiting for them?
Only time will tell. But one thing's certain, Syngene is a company worth watching closely. Thanks for joining us on this deep dive. Until next time, stay curious.